Hello, good morning, ladies and gentlemen. How are you doing today? So we want to ensure that we are on the same page here. So if you can see my screen and you can hear my voice clearly, I will appreciate that you type in hi in the comment section so that we can get the session started. So I will be running through the comment section to get some feedbacks so that we can kickstart this session. Okay, 780, good morning. Razak 83, good morning to you, thank you very much. 822, good morning. Abscess, all right, thank you. 8288, good morning to you as well. Okay, Nova, good morning. 803, good morning. All right, so I will be taking these feedbacks as a confirmation that we are good to go. I'm excited to welcome you to another promising session on the Extreme Speed. My name is Sharif Daramola, and for the next 1 hour we shall be evaluating the financial market using technical parameters, reading price actions to identify trading opportunities lining up for us today. So as we anticipate the New York session today, we will first of all be reviewing all the pairs and instruments we have been monitoring since the beginning of the week. We want to be seeing how well these pairs have been doing so far and what our next line of action would be as we get ourselves prepared for the New York session. Before we run into the chart right now, it's important we scale into the economic calendar as we have a series of macroeconomic events coming up today which will be affecting the US dollar as we have begun to see some traction in the US dollar. You know, since the beginning of the week, the US dollar has been on negative territory as it continues to struggle against all its major peers. So we have a macroeconomic event coming up today, and that is coming up in 2 hours 30 minutes from now. We have the durable goods order, and from the look of things here, considering the data coming in from the consensus, there is a tendency of some positivity going into the New York session today. As you can see here, the previous data is minus 2.1% compared to the consensus of 2.5. So we are going to be looking at how we're going to be, is the incoming data going to be below expectation or beyond expectation? Then we also have the GDP annualized for Q4 coming up also that same time too as well. And from the look of the consensus here, there is a little dip against the previous data. So we want to see what is going to be happening then. And also we are going to be looking at the charts to see how participants in this market will be anticipating this event. Then we also have the non-defense capital goods order, which is also coming up that same time. That is 2 hours 30 minutes from now, and that also has a huge dip here. If we compare the consensus to the previous data, we can see the consensus here is minus 0.2% against the previous one, which is 0.2%. So we want to see what will be coming up in 2 hours 30 minutes from now. And from all the data we have here, we should understand that majority or major players in the market will be anticipating this event, and we shall be seeing the anticipation reflected on the chart as price action. So we are going to be looking at the chart right away to see how we want to be getting ready, how we want to position ourselves so that we can catch any of those moves when they finally happen. So the first thing we are going to be doing right now is to dive into the first commodity we are going to be trading, and that is the US oil. So on the US oil, if we look at the structure we have here, in fact, since the last 48 hours here, price action has been in a huge consolidation phase between the $80.50 level and the $79.75 area, as you can see here. Though we enjoyed a bearish momentum since the beginning of the week here, as we joined this bearish move to the downside, which gave us about let's see, how many pips was that? We were able to scoop about well, the first one gave us about 150 pips, and the second position here on Tuesday gave us about 120 pips in profit. And one thing we observed that since price tested the $80 level, in fact between the $80 level and the $79.75 area, we saw some buy pressure coming from that level, so we were able to identify this area as a demand zone going forward. As you can see, heavy attempt by the sellers to break down the $80 $79 area has been met with strong resistance from the buyers. And with that structure being identified here, it's more or less tending towards something that looks like a reversal pattern. And if we look at the structure, considering the impulsive bearish leg that we have been noticing since the beginning of the week, you would observe that as the impulsive move tested the $79.75 level, we begin to see some buy pressure coming in from that area, evolving into something that looks like a reversal pattern, where the $80 level, $80.50 level, will be serving as the neckline for the structure. And this is the $80.50 level here. And whenever we have a neckline of a reversal pattern like this, all we want to be waiting for is a breakout retest of the neckline to give us a signal that the reversal pattern is now mature and valid. And in fact, during the New York session yesterday, we saw this engulfing candle breaking out of the $80.50 level, came back within the structure here, and another bullish momentum started from that area. For me at this point, with the breakout of that $80.50 level, it's a beautiful signal that buyers might likely be coming in gradually in this market. So I had my buy stop order right above that $80.50 level, and this buy stop here has been triggered during the early hours of today. And for those who had been part of this journey as this new buy position that we have here, kudos to you for being on standby to catch this move, as price action appears to be beginning another impulsive move to the upside. In addition to this current structure here is that bearish trend line which we identified yesterday after connecting the series of lower highs here. As you can see, price action consistently respected that bearish trend line since the beginning of the week, and as a result of that, that bearish trend line appears to be holding bearish momentum. But with the look of things in the last couple of hours now, having a breakout of the neckline of that reversal pattern at the $80.50 level and the bearish trend line now, it's more or less a sign that we might be that further confirms that a bullish momentum is very, very likely at this point. So for those who have been taking advantage of this opportunity here, had the breakout of both the $80.50 level and the bearish trend line here, kudos to you for being on standby to catch that move. So let's see how far this is going to go. It's a risk worth taking anyways, so let's ensure that our stop loss is placed right below the $80 level. Let's give some breathing space for price action to breathe in anticipation of another wave of bullish momentum. Now, for those who had missed out on this opportunity at the breakout of the $80.50 level, we shall be looking at how we want to be joining this potential rally if it finally happens. So with the breakout of the $80.50 level here, breaking out of the neckline of that reversal pattern we identified earlier, what we want to be looking out for, this is for those who had missed out on this opportunity, is to hope that price action would likely come back, do a retest of the structure which lines up with the bearish trend line here to incite another bullish momentum. If buy pressure is identified around this area, then we could actually join the rally to the upside. So that is one of the scenarios we shall be expecting to join this potential rally to the upside. So if we have missed the entry point at the $80.50 level, let's see if the market will be doing a retest of structure. And if a retest of structure happens, we look out for buy pressure right here on our lower time frame, like your 5 minutes, 10 minutes, or your 15 minutes time frame to look out for trading opportunities to join that bullish momentum to the upside. Now, if price does not come back into the $80.50 level, but instead it continues to climb and continue to find higher highs, then we shall be waiting at the bus stop here at the $81.20 level, looking out for trading opportunities above that structure. So if a breakout of that level happens, then we want to be joining that potential rally from that area. And if you look at how important the $81.20 level has been, you will see that since the beginning of the week, it has been a major determinant of price action. It has been a strong demand zone initially at the beginning of the week. Remember, that level was our support level for the week. As you can see, we started seeing buy pressure coming in from that level on Monday and Tuesday, and not until and the later on Tuesday that we saw the breakdown of the $81.20 level. And during the course of New York session yesterday, we saw a retest of that structure, respecting that bearish trend line as well. And right now, price is approaching the $81.20 level. So we shall remain very patient here. And for those who are taking advantage of this move right above the $80.50 level, what we want to be doing as soon as price tests the $81.20 area is to move our stop loss accordingly to lock in some profit, as what we want to be doing is to wait out and see how price action will be reacting to the $81.20 level to decide if we are going to be adding more position to our existing trade, or we're going to be getting ready to sell from that level, since it has been a selling niche at one point in time during the New York session yesterday. So what are we going to be looking forward to around this area? So as soon as price gets into the $81.20, you move your stop loss accordingly, and what we want to be seen to buy is to see a breakout of that structure. And if we scale down to a lower time frame, like a 5 minutes time frame, look out for buy pressure, multiple rejection of this area, then we want to be adding more position to our existing trade. So that's how we want to be buying the US oil from that level during the New York session today. Another situation that could happen there is that if price gets into the structure and we start seeing some sell momentum on our lower time frame, then we might likely be seeing something like a reversal pattern on your 5 minutes, your 3 minutes time frame. Then we want to be anticipating probably a retest of either the $80.50 level or the bearish trend line that was broken a couple of hours ago. And if that happens, we join the decline to the downside, then we look out for how price will be reacting to the structure between the $80.50 and the bearish trend line, which might likely anticipate another wave of bullish momentum. So we need to be very careful as we continue to monitor this trade. And if the bullish momentum continues in such a way that it breaks out of the $81.20 level to the upside, a further breakout of the $81.80 level will also be welcoming additional position to our existing trade. Then we also have a structure here at the $82.60 level, which was the first selling area at the beginning of the week here, which was a selling niche at one point. We're going to be waiting to see how price action will react to that level, if we are going to be adding more position or getting ready to join another decline from that level. So these are my views here on the US oil as we get ourselves prepared for the New York session today. So let's continue to anticipate this bullish momentum. As you know, we've identified a demand zone around the $79.75 level. Price did multiple rejection of the $80 area, and this is a very beautiful sign that buy pressure is gradually coming in on this market. So let's be on standby to catch these moves when they finally happen. And to make things easier for you, you would want to screenshot my screen so that you can use it as a reference point whenever you're about to make your individual decision on this commodity. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be checking the comment section from time to time to see if there are any inquiries or comments regarding what I have just explained. So let me read through the chat and see if there are any questions before we move on to the next option. So what do we have right here? We have let's see, USOil. Okay, hi, good morning. Razak A3, good morning, thank you. Okay, 9949, hello, how are you doing today? Okay, 859, Razak again. All right. Hey Steamroller, good morning to you, glad to have you around. You're welcome. And how's work today? All right, so in the absence of no questions, let's move on to the next option. So I will take that as a confirmation that we are good to go here. Okay, glad similar to hear all's good. Okay. So the next option we are going to be treating this morning, as usual, is going to be the US Tech. And in fact, it was quite a profitable situation for us here on the US Tech yesterday. If you are able to be on standby to catch these opportunities, it will have been a very, very huge profitable week for you. Now let's quickly run through how the week started, as we initially identified the channel between the 11,640 so sorry for the breaking transmission. Okay, so we initially identified a beautiful channel around the 11,640 here, which was the resistance point of the channel, and we also had a support level for the channel identified at around the 11,590. You could approximate it to about the 11,600. It's okay, whichever one suits you. So we were looking out for either a breakout or breakdown of the channel to give us an opportunity to either buy or sell. And in fact, what happened during the New York session on Monday was a significant breakout, and we were able to join this bullish momentum to the upside, which fetched us about over 260-70 pips thereabouts on that one. So at the beginning of the week, we were profitable, as we were able to make some profit as price action moved in our favor. Now later on Tuesday here during the live session, we saw that price was initially caught within a channel here, went back into the channel after testing the 11,900. We saw price come back into this channel, and you know, from a technical standpoint, whenever we have such channel like this, we know that there is an indecision in that market where participants are not sure of the direction of the next move, and if a breakout of the channel happens, then it's a clue of where price action is likely going. And what we saw here on Tuesday was quite interesting. In fact, we identified this during our live session, and we said a breakdown of the 11,840, and if possible price action comes back to do a retest of structure, we want to be adding more position to that existing trade. So we saw some little consolidation phase, though price broke down initially. Price moved about how many pips was that? About 70 pips in our favor before this bullish momentum started. Then we had a little volatility in the market, which broke out on either side, taking us out of all positions, allowing us to do some resets. And for those who took this move below the 11,840, we rode the move all the way down into the structure during the during the live session yesterday. And one thing I stated here is that we want to be moving our stop loss. We moved our stop loss to around 11,750, and during the live session yesterday, we identified a level at around 11,700, where I said we shall be using it to guide trading activity for yesterday. And what I stated was that a breakdown retest of the $11,700 level will be a beautiful signal to join a decline to the downside, and this was exactly what happened as price action broke down retest the 11,700, and price action moved over 140 pips in our direction before this bullish momentum happened. I hope you were able to take advantage of that move, and if you did, you will have made at least 100 pips on that one. Kudos to you for that. Then something happened again during the New York session yesterday, and this was clearly seen on the lower time frame. And if you scale a little bit down into your 15 minutes or 5 minutes time frame, this is what I saw here. Hold on a second, let me show you. All right, so this is what we saw here on the 5 minutes, 15 minutes time frame, whichever one you were able to see. As soon as price got into the structure around the 11,600, we saw some buy pressure around this area. We saw some consolidation phase, multiple rejection of the 11,550, signaling a possible bullish momentum. And we saw the breakout retest of the 11,600, and it was a very beautiful signal to join a trend continuation to the upside. And in fact, price continued to move to the upside. Let me scale back up into a 1 hour time frame so that we can see things more clearly here. So price action continued to the upside, as you can see here, climbed above the 11,600, and if you had joined the move all the way up, you will be in about 280 pips in profit at this point. So this is a very, very good position too as well. And during the later part of yesterday, another breakout of the 11,770 was another good opportunity to add more position to the existing trade there. So it is quite a profitable week for us here on the US Tech as well, and kudos to everyone who has been part of this profitable trade. So now that we are going into the New York session today, and remember we have a series of macroeconomic events we are looking forward to. Definitely there's going to be some liquidity being ejected into the market prior or post the event, and we shall be seeing some traction. Now, where's the traction going to be going? Is it going to be going bullish, or is it going to be going bearish? That's the next question we want to be asking ourselves now. If we look at the current structure we have on the chart right now, one thing you will observe is that as soon as price tested the $11,900 level, we have been witnessing selling pressure from that structure to emphasize some level of selling strength around that area. The first one happened here on Monday. We saw as soon as price got into this level, we saw some selling pressure come in. The same thing happened here on Wednesday as well. We saw another selling pressure coming from that structure. And in the last 3, 4, 5, 6 hours now, price action is back into that $11,880 level, and we have been witnessing sharp rejections of that structure. And this gave me a clue that we might be having another wave of bearish momentum from that level. As you can see, since the beginning of the week, price has been caught within this channel around the 11,880 and the 11,600, which has been the support level of that channel. So if this is going to continue as it has been in the past here, selling pressure around the 11,880 is likely going to be a beautiful signal to join a breakdown retest of the 11,880 to join that trend continuation to the downside. And in fact, I have my sell position triggered around the 11,880. Do I have a position running at this point with some small profit right now? Well, it's a risk worth taking. So if you're not yet in this trade, you might want to join right now, and let's see how far this is going to go. We are profitable already on this one, so if we lose 1% risk on our portfolio on this one, it's not something that bad at all. So right now we continue to look out for selling opportunities right below the 11,880 as we get ourselves prepared for the New York session for today. Now, before I head into this current structure here, let's quickly run through the daily time frame. Let's see how the technical structure is on that time frame to be able to have a better perspective into what our expectations should be like for today. So right now we are back at the daily time frame, and this is what we have here. And on the daily time frame, it's very obvious that we have been bearish. In fact, throughout the course of last year, price action has been bearish on the US Tech, and as a result of that, we were able to connect the series of lower highs here, which gave us that resultant bearish trend line that you can see on your screen right now. Now, if we zoom into what has been happening here since the beginning of the year, I told you at the beginning of the year that we have two structures which we shall be using as a very strong point to reckon with while we look out for trading opportunities on the US tech. Now, the first structure we identified was the $11,000 level, which has been a strong buying niche for the last 6 to 7 months. That level has been holding buy pressure. Then we also have the 11,700, a level which was holding selling pressure for quite some time too as well. As you can see, it has been holding strong selling pressure, giving us a beautiful channel between that level. Now, at the beginning of the year, we joined this bullish momentum, which brought price back into the 11,700, breaking out of that structure here to signal a possible bullish momentum at this point. And to further emphasize the importance of this confluence here, if you look at 11,700, it shares a confluence with that bearish trend line which we identified earlier. So with a breakout of both of the 11,700 and the bearish trend line here, are we going to be seeing a trend continuation to the upside? That is one thing we want to be looking at this point. Now, look at the breakout of that structure. Price gave us a retest of structure, sharp rejection of that structure during the trading session yesterday, and price appears to be continuing to the upside here. So if this retest continues to bring us buy pressure around this area, we might likely be looking out for bullish momentum at this point. And another thing that could happen here is if we start seeing selling pressure here. Hold on a second, let me show you something here. Look at this area, the $11,950 level and $11,900. You can see what has been happening here since the beginning of the week. We can see that every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers here. So we need to take this also into consideration, and that is the 11,950, 11,900 zone. If selling pressure continues below the structure, we might likely see a situation where price comes back to break down the 11,700 to incite a sell-off in this market, hereby suggesting that this will turn out to be a false breakout. However, if price breaks out of the 11,900, 11,950 area, then we might be looking forward to adding more position to our existing trade. So what we are going to be doing now is to scale down to the lower time frame. Let's further see how price action has been reacting to the zone around the 11,900 and the 11,950 to decide what our next line of action will be. So in that regard, I'll be scaling down to the 1 hour time frame to see things more clearly. So right here we are on the 1 hour time frame, and for the sake of the session and for the sake of the new structure we were able to identify on the daily time frame between the 11,900 and 11,950, let's do some readjustment, find a new resistance point around that to emphasize that area, so we can easily take that into consideration while planning our trade for today. So this is what we have right here. So we have between the 11,950 and the 11,900. So this is the area here. So let's identify this area as our supply zone. Since every time price gets into that structure, we have been seeing selling pressure come in from that level. So we shall label this area our supply zone. Let me change this color here to something like something lighter. All right, so we have something like this to look out for. So we are within a very strong supply zone at this point as price action continue to reject that level. So if we are going to be buying the US tech at this point, well, you all understand that we want to see price break out of that supply zone, taking us out of that supply zone, taking out all the sell position there, then get some liquidity to incite some buy pressure above this level. Then we could actually join a trend continuation to the upside from that point. So if price continue to remain below the structure here or below the 11,880, then we continue to look out for selling opportunities on the US tech for today. So it's a very simple setup we have here on the US tech. So let's continue to be on standby so that we can catch that move. And I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision on the US tech during the New York session today. Now, another thing to buttress this current structure we have here is the 11,840, which initially has been the support level for the first couple of hours of the week here. So we saw that that level was a support level initially before the breakdown of that level happened. So if you are not comfortable selling right around this area, then you might want to wait for price breaking down the $11,840 level, retest of structure over lower time frame, then you could join that decline to the downside. But if you're already in this trade like me, with your stop loss somewhere right above the $11,950 level, well, a breakdown retest of the 11,840 should be welcoming additional position to our existing trade. So let's be on standby to catch this move, and I wish you best of luck in that regard. So let's see if you have any questions regarding what I just explained so far. If you have, feel free to drop your inquiries in the comment section, and I promise to check the comment section from time to time to see if there are any inquiries in that regard. Okay, 8603, good morning to you. JB02017, good morning to you too as well. So with that being said, now let's move on to the next pair for today. And the next pair we are looking at for today is the GBPUSD. And in fact, on the GBPUSD, we had this bullish momentum that started yesterday and continued to push price to the upside. And if you remember during the live session yesterday, when we took advantage of this sell position right below the 1.22350 level, as we saw multiple rejection of that area. And remember, the reason why we sold below that structure was because of our projection that this bullish momentum is likely going to be a retracement of that previous impulse leg, where we were looking forward to a trend continuation around this area. And I'm glad to remind you here that I laid emphasis on the current structure that we had around the 1.2300 level, where I said if a consolidation phase happens here on our lower time frame, which gives a situation where price is unable to break the previous low, we might likely be seeing that as a bullish signal. And that was exactly what happened here. Price was unable to break the previous low, which is at the 1.22700 area. We saw buy pressure around the 1.23 level with a beautiful engulfing candle to confirm that buyers are still very strong at this point. And remember what I said yesterday, if this continues to happen, a breakout retest of the 1.22350 level will be a beautiful opportunity for us to join a trend continuation to the upside. And in fact, we had a breakout. If you had missed this one, the market presented us another opportunity. If you had set your buy limit order around the 1.22350, the second position will be triggered and price action continue to move in our favor. Now, with the situation we have here now, price has continued to climb to the upside here. And one thing we have observed in the last 12 hours now is that price action has been finding selling pressure around the 1.2400 level. And if we compare what is happening now with what has been happening in the past around this level, you would observe that the 1.224 has a tendency for selling pressure. So what happened here last week Wednesday, we saw selling pressure from this level, we saw selling pressure here, though we had a breakout here on Monday, but immediately price came back to break down that structure to the downside. We saw selling pressure here on Tuesday, and on Wednesday yesterday as well, we have been witnessing selling pressure around that area. And in fact, at this point, we need to be very careful about the buy position we are in right now. So what we want to be doing is to move our stop loss to lock in some profit, and below the 1.23800 level seems most appropriate to lock in our buy position at this point, as we might likely see price breaking down this bullish trend line to incite another wave of selling momentum at this point. And if you look at this candle here that happened a couple of hours ago, it has closed in the form of a shooting star candle, and from a technical standpoint, a shooting star candle reveals that there is tendencies of selling pressure still existing in this market. So we need to be very, very careful at this point. So going into the New York session today, what is really going to be our plans? Well, before we go into the details on that one, we want to be scaling into the daily time frame. Let's have a look at what is really going on from a larger perspective. Then we should also take into consideration the fact that we have some macroeconomic event coming up today, which is going to be affecting the dollar, and we are beginning to see the anticipation of this macroeconomic event. As you can see, we have a consolidation phase here in the last 12 hours now, as participants are stepping aside to see how we are going to be reacting to the data coming in from the macroeconomic events for today. So let's dive into the daily time frame here, and let's look at things from an holistic point of view. So on the daily time frame here, this is the daily time frame which we identified at the beginning of the week. And remember, we have two simple structures which falls around the 1.2400 level and the 1.200 area. And talking about the 1.2400 area, you can see how this level has been a major determinant of price action since the month of May last year. Saw the breakdown here in the month of May, breakout here, price broke down, retest of structure here in the month of June, and since then price had continued to trade below this level to further emphasize the strength of the sellers at this point. In the month of November, bullish momentum came in. Buyers were trying to break out of that structure, but it didn't last long, as we saw this huge engulfing candle taking price out of that structure. And since the beginning of last week trading session, we have seen that as soon as price got into the 1.2400 level, we have been witnessing selling pressure from that area to further emphasize the strength of the sellers at this point. So at this point in time, if we take into consideration what has been happening in the past, you will definitely be tending towards taking a sell position at this point. So what we are going to be doing now is to scale down to our lower time frame and look out for how to join that decline to the downside if it eventually happens. And remember, we are in a buy position already. If we've moved our stop loss accordingly on that one to lock in some profits just in case the sell momentum begins. We don't want to get stopped out in a loss. So we are going to be looking at how to sell on the 1 hour time frame, and if it so happens that a significant breakout of the 1.2400 level happens with buy pressure above the structure on our lower time frame, then we could be thinking of adding more buy position to the existing position we already have running here. So with the information we have gathered here on the daily time frame, let's scale down to the 1 hour time frame to see how participants are actually reacting to the structure, and let's see if we can identify a technical structure we can use to guide our trading activity for today. Now, with that being said, let's dive into the 1 hour time frame, right back into the 1 hour time frame to decipher what our next line of action would be. and taking into consideration the importance of the 1.2400 level at this point. So remember, I told you that since we have joined the bullish momentum right above the 1.22350 level, we have price action moved in our favor, and currently you will have a minimum of about 60 pips to running in profit at this point. And considering the fact that the 1.2400 level has been a strong selling niche for over 6 to 7 months now, as I was able to identify it on the daily time frame, and thinking of selling below the structure, what structure are we going to be using to guide our trading activity for today? Well, what I'll be doing right now is to look at the structure here. You can see, remember, we had this bullish trend line, a trend line which has been holding bullish momentum since the beginning of this year. I think we will be able to see things clearly on the 4 hours time frame. So let me zoom out onto the 4 hours time frame so that you can see what I'm talking about here. So this is the bullish trend line that has been guiding bullish momentum since the beginning of this year. As you can see, price has consistently found higher lows rather from this level, though we had a little breakdown here last week, but at the beginning of this week we saw price climb up that bullish trend line at this point, and right now price is currently oscillating right around that bullish trend line, to emphasize that we are at a critical point in this market. And considering that we have a macroeconomic event coming up later on today, any move, any breakout from this level is definitely going to be massive. So we want to be positioning ourselves in such a way that we can catch this move when it finally happens. So we are going to be identifying some simple setups here to make things a little bit easy for us to identify trading opportunities during the New York session today. So the first thing I'll be doing here is to identify the structure here at the 1.23850 level, which I will be explaining to you in a moment why that is. First of all, let's label it. We have the 1.23850 level here. 1.23850. Did I label that correctly? Okay, beautiful. So now look at what happened here during the New York session yesterday. We saw this candle closing like a shooting star candle, which from a technical standpoint is a very strong bearish signal. Then we had the breakout of the structure here. Price action appeared to come back and do a retest of this level here like 3 to 4 hours ago, and we continue to see buy pressure again from that same level. And what makes this area more interesting is the fact that it shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. So with that being said here, what are we going to be looking out for to sell the GBPUSD based on this current structure? So what we are going to be definitely be looking out for is to see price action break down the 1.23850 level, taking out all the buy position there, giving us a beautiful signal to join a decline to the downside. And if selling pressure continues below this level, we want to be adding more position to our existing trade. So the 1.23850 level, which shares a confluence with that bullish trend line, is going to be our yardstick for selling opportunities during the New York session today. Now, with that being said, and considering the fact that we have been on the bullish momentum since the beginning of the year, and the fact that price is right on that bullish trend line, the trend line here still has a capacity to push price to the upside. So we want to keep that option of a bullish momentum open to as well by getting ourselves prepared, identifying a technical structure we can use to join that rally to the upside. So to make things easier here, I have connected the series of lower highs here, and to use that, and remember the 1.24 level, which has been a strong selling niche, we want to see an outright breakout of that level to give us a confirmation that buyers are here to stay. But I'm doubting that will happen based on the current structure, and looking at the nature of these wicks here in the last 12 hours, we can see it's a sharp rejection of that zone. So what I'll be looking forward to buy here, I want to see a significant breakout of the 1.24 level, taking out all the buy sell position here, breaking out of this trend line. Then if possible, price action does a retest of that structure with buy pressure above this level on our lower time frame, then we want to be joining a rally to the upside from that level. But I doubt if this is going to happen today, considering the strong selling pressure, considering the strong supply structure around the 1.24 level, which has been very consistent in the last 6 to 7 month. So we continue to look out for selling pressure below the 1.23850 to join a decline to the downside on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section. Okay, so moving on, let's talk about the next pair. And the next pair we are going to be talking about today is the XAUUSD. And on the XAUUSD, we've been enjoying some bullish momentum since yesterday. And during the live session, we were around here. Hold on a second, let's quickly run through this. Okay, so during the live session, we were around the $1,924 level. Price action broke down that bullish trend line. And remember, we had a sell position prior to the live session yesterday, right around the 1,935 level, as price action had moved about over 1,000 pips in our favor when I told us to move our stop loss accordingly to lock in some profit somewhere around below the $1,930 level. And one thing I said about the structure is that since price breaks down this bullish trend line, we might likely be seeing a trend continuation to the downside. And for those who had missed the opportunity at the breakdown of the 1,930, I said we should remain patient and see price come back to do a retest of the structure with selling pressure below this level to join a decline to the downside, which never happened at all. Then the other possibility we were looking out for yesterday, I said, if price finally does not retest the structure but instead breaks out of the 1,930, does a retest of structure, and if possible we see buy pressure above the 1,930 on our lower time frame, we want to be joining a trend continuation to the upside. And this is exactly what happened here yesterday. We saw the breakout. In fact, we saw a couple of rejections of the 1,930 by the buyers to confirm that this is a very good opportunity for us to buy the XAUUSD. And if you had joined at that point yesterday, kudos to you, as you will currently be you will have price moved about 1,800 pips in our favor before this bearish momentum started during the early hours of today. So I was taken out of all the buy position I had because we had one here. Remember, I told you that we should be adding more position at the breakout of the 1,935 and the breakout of the 1,940. And as soon as we cited buy selling pressure here, something that looks like a reversal pattern, it was a very beautiful opportunity for us to move our stop loss accordingly. This is a huge sign that sellers are gradually coming in on this market. Now, with the situation we have here right now, we don't have any position running, and it appears certain pressure beginning to crawl into this current structure. So how do we intend to take advantage of this move? Now, if we look at what happened here during the early hours of today, that is around the $1,949 level, that was around here. For the sake of clarity, let's identify the structure so that we can have a visual representation of what we are talking about here. So we have the 1,949. As you can see, as soon as price got into that level, we saw selling pressure around that area, which transitioned into a reversal pattern in the form of a double top structure. This is what we saw here. So we saw this impulsive move. Price tested the 1,949. Price came into the 1,942, saw the second test of structure, then we saw this move. Now, whenever we have a reversal pattern like this, what's the next thing we do? Correct, we look out for the neckline of that reversal pattern, as we're going to be using that to guide our trading activity. So with the neckline sitting around the 1,945, let's label that area as well. 1,945 level. I would like to give this a purple color to differentiate it from the okay. So we have 1945 level, which is serving as the neckline of that reversal pattern, as you can see here. Retest, then we had the breakdown of that structure. For those who are taking advantage of this breakdown, well done to you. I missed that actually, and we saw the breakdown retest of the 1945 as price action drop further to the downside. Now price retest the $1935 level here, which shares a confluence with that bullish trend line that has been guiding bullish momentum in the last couple of weeks. So now we are at a critical point here. We might likely see some buy pressure come in, bringing price back into the $1945 level to incite another wave of bearish momentum. That is one possibility that could happen here. Or price action comes back to retest the 1940 with selling pressure below this level on our lower time frame to incite another wave of bearish momentum. And the last scenario that could happen here is if this engulfing candle evolves into a trend continuation pattern around the 1935. That is, we start seeing something like a consolidation phase. It might be in the form of a bearish rectangle pattern, a wedge, a pennant, or a flag pattern. What we are going to be looking out for is a breakdown retest of the 1935 level to join that decline to the downside. So the current structure here is tending towards a bearish momentum, so we want to be on standby to catch either of these opportunities, either around the 1945, 1940 level, or the 1935 area. And if price further breaks down the 1930, we continue to add more position to our existing trade. Now, in as much as we are looking out for selling opportunities on the XAUUSD, we should not ignore the possibility that buyers could come in at this point. Now, why have I said so? If we look at the structure, let me zoom into the 4 hours time frame so that we can see things more clearly here. If we look at the structure here on the 4 hours time frame and taking into consideration the bullish momentum that began this here at above the 1820, if we connect the series of higher lows, we have this bullish trend line that you can see on your screen right now, and this trend line has been guiding bullish momentum ever since the beginning of the year, and price action appears to be oscillating right above that trend line at this particular point in time. So we are at a critical point in this market right now, which might likely incite a bullish momentum considering this current structure. So we don't want to ignore the possibility of a bullish momentum at this point, though it's looking very bearish for me at this point, as I think that a retracement phase is long overdue considering this bullish impulsive move since the beginning of the year. So in as much as we are looking forward to setting momentum with a further breakdown of this bullish trend line, we should not ignore if buyers might likely take over this market above this bullish trend line. So what we are going to be doing now is to look out for ways to catch that move if it eventually happens. Now, if we scale down to the 15 minutes time frame here, we can see that as soon as price tested the 1935 level, a level which shares a beautiful confluence with that bullish trend line, we have been seeing some buying traction as price rejects that level and appears to be finding higher lows at this point. So to be on the safer side here, you might want to join this counter trend opportunity after we've identified a structure sitting around the $1,937.50 level. And if I want to make things clear enough, if we draw the structure out, this is what we will be able to see here. I would like to give this a blue color, or let me give it a dark color so that I can differentiate it from the previous structures. So we have the $1,937.50 level. Okay, I'll give this a dark color. All right, so this is what we have here. So we can actually use this simple setup here to guide our trading activity. Now look at what happened here. Even though we have a sharp rejection of that bullish trend line, that line which shares a confluence with that 1935, we saw that as soon as price got into the $1,937.50 level on our lower time frame, we have been witnessing selling pressure coming in from that level. So this is where the catch comes in. If price cannot break out of the $1,937.50 level, then this will be a good signal for us to sell at the breakdown of the $1,935 level to the downside. However, if price breaks out of the $1,937.50 level with buy pressure above the structure, this is a beautiful counter trend opportunity to join that move to the upside. And as we join that move to the upside, please note this: we will be moving our stop loss accordingly to lock in some profit. As for me, this is more or less looking like a counter trend opportunity considering the bearish momentum we have been witnessing since the beginning of today. So we continue to move our stop loss accordingly. You could have your take profit target around the 1,945 or the 1,949 area. Move your stop loss. Let's see how many pips that could give us if price breaks out. That's about 700 to a maximum of about 1,000 pips to catch there. Then we wait out and see how price action reacts to the structures at the 1,940. If there will be selling pressure around that area, or the 1,945 if there will be selling pressure around that area to join that decline to the downside. So this is what I'm saying. It could happen like this, or it could happen like this to the downside. So even if we are joining the counter trend opportunity at the breakout of the $1,937.50 level, we should be mindful that price could trigger a sell position at any point in time. So we'll move our stop loss accordingly as we lock in some profit. Now there is one thing I will say here: if price tests the $1,940 level, move your stop loss to your entry point so that you'll be at break even if a bearish momentum comes in suddenly. So these are my views here on the XAUUSD. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section and I will be willing to be of help in that regard. So that is that on the XAUUSD. So I will be going on to the last pair for today, and that is the XAGUSD, which was introduced to us by Steamroller here. And during the live session yesterday, remember we were expecting the sell position, had the breakdown retest of the $23.50 level that was here yesterday, and in fact we saw that move. Price action moved about 200 pips thereabout in our favor before we saw this bullish momentum that took us out of our position. As you know, we will definitely have moved our stop loss to lock in some profit or to break even at that point, and price action continued to move to the upside. So I actually missed all this bullish momentum yesterday, as I was not sure if this bullish momentum will remain valid at this point. And remember, at the beginning of the week I said something about the XAGUSD, considering the structure we identified on the 4 hours time frame and looking at what has been happening here since the beginning of last week. We noticed that price action has been finding lower highs, despite the fact that we have a channel between the $24.50 level and the $23.20 level. One thing we observed is that we have been finding lower highs, and as a result of that we had this bearish trend line figured out. And if you remember, on Monday I told you that if price climbs up into the $24 level, which shares a confluence with that bearish trend line, we should be looking out for selling opportunity around that area. And as you can see now, we can see selling pressure resume here during the later part of the New York session yesterday, and price had continued to find lower lows since then. And for those who had been part of this one, kudos to you for being on standby. Personally, I missed this opportunity, but if you did, well done to you for being on standby to have caught that move. And as we head into the New York session today, what is definitely going to be our plans as we go forward? Well, I'm still going to be holding on to the structure we have here at the $23.50 level. And in addition to the $23.50 level here, if we look at what has been happening here since the beginning of the week, you will notice that price has been finding higher lows. And if we connect the series of higher lows here, this is what we are going to be finding here. and we should definitely be using this to guide our trading activity for today. So like I said, I'm still expecting to sell a bearish momentum here. So if a breakdown of this trend line happens, it will be a very beautiful sign for me to join that decline to the downside. And as you can see, it's closer to that structure which I identified at the $23.50 level. So if breakdown, retest of structure with sudden pressure on my lower time frame, doing a further breakdown of the $23.50 level, I will definitely be thinking of adding more position to my existing trade. So at this point, I still tend towards a bearish momentum here, as long as price falls within this bearish trend line, which has been holding selling momentum since the beginning of last week's trading session. So as long as price remain below this bearish trend line, I will continue to hold on to a bearish bias. However, if a breakout of this trend line happens, breaking out of the $24 level, then at this point I will consider the bearish trend line no longer having the capacity to continue to hold bearish momentum. Then at that point I will be looking out for buying opportunities around this area to join a trend continuation to the upside. But if price continue to remain below both the $24 level and the bearish trend line here, I will continue to feel comfortable in my sell position on the XAGUSD. So what are we looking at to guide our trading activity for today? I have identified two structures for us here. In fact, we have three structures. The first one is this trend line here, this blue trend line here. After connecting the series of higher lows, this trend line has been holding bullish momentum since the beginning of this week. So we want to see an outright breakdown retest of that trend line to give us a signal to add more position to our existing trade. Then another structure here is the $23.50 level here, which could give us further confirmation to be in a sell position. So if a breakdown retest of the $23.50 level happens, we want to be adding more position to our existing trade. And the major parameter, the major structure we identified here is this trend line here, which has been respected since last week. As long as price remain below these structures, I will feel comfortable in whatever sell position I have at this point. So these are my views here on the XAGUSD. If you really do have any questions, feel free to drop your inquiries in the comment section of this video. And I think I see a couple of questions here. One from Cappy. Cappy is asking, if the price reaches 1,949, what will happen next? I want to assume you're talking about the XAUUSD, if I'm correct. Well, let's quickly look at what you just highlighted there and see what you're talking about. So as you can see here on the XAUUSD, we have the $1,949 level. Now if price comes into the 1,949, remember we have been witnessing selling pressure since the early hours of today around the structure, so that area is still a strong selling niche. However, if price comes into the structure breaking out of that level to the upside, then this will be a beautiful signal confirming that price action has taken out all the sell position around this area, giving us some liquidity which will be reflected on the chart as buying pressure on our lower time frame. It could be your 10 minutes, 5 minutes or 15 minutes time frame. Look out for buy pressure above this level, then you could join a trend continuation to the upside at that point. But I doubt price will get to that point. I doubt it. But if it does get to that point, well, let's be prepared to add more position to whatever buy position we have running prior to that point. So I hope I made myself clear here, Cappy. If you really understand what I just explained, kindly state that in the comment section so I know that we are on the same page here. So with that being said, let's run through all we have talked about today. Let's do a recap of what we talked about today before we drop the curtain here. So the first commodity we talked about today is the US oil, and on the US oil we were able to identify a demand zone around the $79.75 area, which falls within the $80 level, which has been a very significant key level for us on the US oil since last year. And one thing we also observed is that following the test of the $80 area, we have been witnessing some buy pressure around that area to signal a possible reversal pattern around that level. And with the identification of a reversal pattern there, we had a neckline sitting around the $80.50 level, where we said a breakout retest of that neckline should be giving us an opportunity to confirm that a reversal pattern at this point is valid. And in fact, in the last 12 hours, we have seen price action break out of the neckline area a couple of times. We saw the one here, we saw another one here a couple of hours ago, and I told you I have a buy position running at this point. So it's a risk worth taking if you have a buy position right above the $80 level, which also shares a confluence with this bearish trend line that has been holding selling pressure since the beginning of this week. So if a breakout of this trend line at $80.50 level happens here, we want to feel comfortable in our buy position. So let's continue to hold on to our buy position as long as price remains above the $80.50 level. And I told you that if a breakout of the $81.20 level happens, buy pressure above that structure should be triggering another position, and the further breakout of the $81.80 level will be welcoming additional position to our existing trade. So that is that on the US oil. Then we went on to talk about the US tech. And on the US tech, remember, we've been profitable on the US tech since the beginning of the week as we joined the breakout of the 11,640 initially. That was on Monday. We also joined some sell momentum here on Tuesday, which took us into the 11,600. And as you can see, we noticed that price action has been caught within a channel since the beginning of this week, and the channels around the $11,900 level, which has been a strong selling niche since the beginning of the week. And we also have a support level sitting around the $11,600 area. And with the situation we have here, as price action has come back into the 11,880, we have decided to be looking out for selling opportunity considering the supply zone that we have here. So we had a sell position triggered right below the 11,880 with a stop loss sitting right above the supply zone here at the $11,950 level. So we will continue to look out for selling opportunities below the structure, and I have said that if price further breaks down the 11,840, we want to be adding more position to our existing trade. Now, for those who are thinking of buying the US tech, I have told you that we are not going to be buying the US tech unless price action takes out all the sell position that is here within the 11,900 and 11,950. And what are we going to be seeing to see that price action has taken out all the sell position? Well, what we want to be seeing is a breakout of the structure with buy pressure right above this level. Then we could be thinking of joining a rally to the upside. But if that does not happen and price continue to remain below the structure at 11,900, we'll definitely continue to hold on to a bearish bias. Then we went on to talk about the GBPUSD, where we have been holding a buy position since yesterday as soon as price broke out of the 1.22350 level, and I told you to move your stop loss right below the 1.23800 level. Lock in some profit here as we are beginning to see some selling pressure coming in again around the 1.2400 level. And remember how important the 1.2400 level has been in the last 6 to 7 months. It has been a strong selling niche. Remember, I showed you this on our daily time frame during the session, where I cited how important that level has been as a supply zone. And in fact, in the last couple of weeks now, we have been seeing that every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. And price coming back into the structure during the early hours of today, we can see out that level. You can see the nature of the week here. We have been seeing sharp rejection of that structure. So in order to take advantage of this bearish momentum, we identified that price action is at a critical point now, as it sits exactly on that bullish trend line that has been holding bullish momentum since the beginning of the year. So we identified a structure at the 1.23850, where we said a breakdown retest of that structure should be giving us an opportunity to sell the GBPUSD USD for today. And remember, we have a macroeconomic event coming up today, and we have been seeing the reflection of the anticipation of this event, as we can see a huge consolidation phase here in the last 12 hours. So there is a little bit of consolidation phase around this area, and whatever happens, whatever breakout of the structure that happens, I am very sure it's going to be a very, very huge move. So we want to be positioning ourselves in such a way that we can catch this move when it finally happens. Now, thinking of buying the GBPUSD, we're already in the buy position. Remember, we took advantage of this position above the 1.22350 yesterday, and we already have our stop loss right below the 1.23800. And are we going to be adding more position to our buy position here? Well, what we want to be looking out for is an outright breakout of the 1.2400 level, taking out all the sell position there to give us a signal that buyers have come to stay here. And to make things easier for us during the New York session today, for us to identify buy trading opportunities, we have this trend line here after connecting the series of lower highs, and we are going to be using that trend line to guide any possible buy momentum here. So if price breaks out of both the 1.2400 level and the trend line here, and if we are lucky enough we start seeing buy pressure above this level on our lower time frame, then definitely we want to be adding more position to our buy position. But one thing we should take note of here is that any breakout of this channel, of this consolidation phase, is going to be very, very massive. So let's prepare ourselves, be on standby, so that we can catch this move when it finally happens. Then we went on to talk about the XAUUSD, which is the gold. And on the gold, I told you that I'm looking forward to sell momentum. We have been taken out of all the buy position we have here since the breakout of the 1930. So we were able to close with about 1,200 pips thereabout on that one. Now, with a reversal pattern identified around the 1,949 level, as sellers continue to reject that structure, we already have a reversal pattern in the form of a double top structure, and with a neckline at 1,945 level, we already saw a breakdown of that structure. And one thing I said is that there is a likelihood that price will come back, retest that neckline area before another wave of bearish momentum will happen at this point. So I was able to identify some simple setups here, which I said we shall be using to guide trading activities, as we have the 1,945 level, the 1,940 and the 1,935 as an area to look out for selling opportunities. Now, when we scale down to the 15 minutes time frame, I was able to identify a structure at the 1,937.50 level, when I said we have noticed buy pressure around the 1,935, a level which shares a confluence with that bullish trend line that has been guiding bullish momentum since the beginning of the year. So what I said is, if price breaks out of the 1,937.50 level and buy pressure above that level, this is a good counter trend opportunity to take advantage of. And let's see how far that move is going to go. As you know, we are looking forward to price coming back to do a retest of either the 1,945 for another wave of selling momentum to the downside. That is one scenario. Or we could see price come back to do a retest of the 1,940 to incite another wave of bearish momentum. And if that does not happen, that is, if price does not break above the 1,937.50 level, and instead we start seeing something like a consolidation phase between the 1,937 and the 1,935 area, let me relabel this for the sake of clarity, and price action transitions into a trend continuation pattern, it could be a bearish rectangular pattern around this area, then a breakdown of the 1,935 level, a level which shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of the year, will be a good opportunity to join a decline to the downside. So I hope that we'll be on standby to catch those moves when they finally happen. You can also screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. Then we went on to talk about the XAGUSD, which I told you I'm still looking forward to selling opportunities on the structure, as we already have 3 structures here to guide our trading activity for today. The major one is the bearish trend line, which has been holding selling pressure since the beginning of last week's trading session, as you can see here. And then the other one is the bullish trend line here, which after connecting the series of higher lows since the beginning of the week, it has been holding that bullish momentum. So what I want to be seeing here is a breakdown retest of this trend line to incite a bearish momentum for me during the New York session today. And the other structure here is the $23.50 level. If price action does a further breakdown of the $23.50 level, I will be adding more position to my existing trade on this one. Now I made a caveat here where I said in as much as we continue to look out for selling opportunities on the XAGUSD, what happens if price action breaks out of that trend line? And we already have a structure there at the $24 level. If price action breaks out of the trend line, then that will be a sign that the trend line no longer has the capacity to continue to hold bearish momentum. And if that breakout happens, we want to be looking out for buy pressure on our lower time frame right above the structures to join a rally to the upside. So I doubt if this is going to be happening, but if it does happen, we want to be prepared to be part of that trading journey. So kudos to those who are taking advantage of the sell momentum right below the $24 level here as projected at the beginning of the week. So if you are taking that, kudos to you. Ensure you have moved your stop loss to somewhere right above the $23.75 level to lock in some profit as we continue to monitor price action. So on this note, I would like to drop the curtain here. It has been a wonderful moment and I appreciate your attention. Thank you very much for being around. I really appreciate, and I hope that you were able to take 1 or 2 things with yourself into the New York session, and I hope you also are able to screenshot my screen so that you can use them as a reference point when you're about to make your individual decisions during the New York session. Remember, we don't want to get too excited. Whenever our signal comes in, we want to immediately scale down to our lower time frame. It could be your 5 minutes, your 10 minutes time frame, your 15 minutes time frame. We look out for retest of structure supporting the direction of the breakout. Then we want to be joining that rally or decline at that particular point in time. So on this note, I wish you best of luck during the New York session, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review all the pairs we have been monitoring since the beginning of the week and also get ready for the New York session tomorrow. Do have a wonderful evening. Bye bye.